Okay, hi everybody. So this is Giovanni status of the market, uh, and we cover the different events in the market using the power law point of view. So let me share my screen with you. All right. So of course, everybody's aware of what happened in the last few days. We had this major correction that brought us from about this happened in the last couple of days, right? So we were around 95,000, and now we are 85,000. Yeah, $10,000 correction, right? So I already made several posts about let's analyze a little bit this situation and trying to understand where we are, what could happen next. So one of the major things that in terms of the significance of this event is we have discussed many times, even in our physics of Bitcoin show, that Bitcoin, at least in the past, seems to have two modes. Basically, the idea is that we spend about 2 years in this region. So just as a reference, the blue line here is the general power law path. But basically is a compromise between the peaks and the bottom, right? So we draw this long-term trend that is a power law using all the data. But as we went deeper in understanding the power law, we think that real power law behavior is really related to the bottom, that is probably linked with the cost of production of Bitcoin. We have several hints that this is the case. And if you want to understand better the behavior of Bitcoin in terms of other features besides the general trend, you recognize this bimodal trend, right? Where we stay below the blue line for about 2 years, then we spend the other 2 years above the blue line. Usually this is associated with these bull runs. The bull run is also subdivided in two components, one where we go faster than the power law up, and then we correct, and that brings us back to the green area. Many times, in fact, we go all the way to this white line. The white line is the support that is about 60% deviation from the trend. There are other ways to define the support line in terms of standard deviations, etc., percentiles, but probably the easiest way is to think about a 60% deviation from the trend. Now, during these 2 years, we are actually very well confined by this band. And in fact, we tend to be in a region that is even more confined, that is kind of in the middle between the blue and the white line. And here I try to identify these regions in terms of deviations from that center line. That is, of course, also a power law. And you can see if there are large deviations, like when we touch the bottom in one direction, usually that leads to a correction that brings us back to this general green line here. Something similar happens when we are above, but what is going on is that now you have a much larger deviations. The distribution of the deviations is less symmetric relatively to to the center, to the general path, and these large deviations actually create these bubbles. So one way of understanding it is just that if I scramble these data, it will look like if you look at the distribution, it would look like a non-symmetric long tail distributions with these very, very large deviations away from a general average pattern that is identified with this darker red line. So they are similar, but the value of the price is usually above the blue line and the large deviations. Of course, there is dynamics in the sense that the deviations are not just random; they follow a precise pattern. This is why using statistical methods can bring us so far. We need to also understand the dynamics, because it's very clear that we go up and then we go down, right? This can be described statistically, but also it's important to understand that there is precise dynamics here. Now, sometimes you have fake outs where we go above the blue line when we are not supposed to, but again, they are short-lived, and usually there is a correction. We had 1 year, we didn't have any year. We had 1 year. Usually we are associated with a particular external event, or at least one can try to find a link. There was this event, we discussed it in the past. There is no need to explain why this association. This fake out was more related to the ETFs. They kind of brought us above the power law when we were not supposed to be there. But so in terms of what happens right now, because we are trying to understand, right? This is one thing is what happened in the past. Now we are focusing on what is happening now, right? And the best thing we can do, if we want to understand this scientifically, is compare what happens now with what happens in the past. Do we see similar regularity? Do we see differences? So what is similar is that more or less when it was supposed to happen, because we did spend 2 years along this channel, after we had the major correction after the last bubble. All this looks exactly the same with this fake out that was corrected in November, and I called it many months in advance. We were supposed to go through these transitions. So we see these transitions. I actually should use maybe a different colors and color-coded yellow. These transitions are very fast, very, very rapid, and we go in this new region. And in fact, also this was very similar. When we are in this region, we tend to go faster than the power law. So right now, to give you an idea, the power law calculates that the average return is about 0.1% a day. And initially, we went much faster than that. We came close to almost 1% a day. It was very, very fast growth. And then, we had a correction. We stay above the blue line. And then for a long time, actually almost like 2 months, we were flat, right? The overall result was that it seemed actually we were kind of following the power law, even if in theory we are supposed to go faster during the bull market. But because of this period where we kind of we're flat, everything average to this, right? I was worried, to be honest, about this being flat. I have mentioned this in previous report. It seems almost artificial, because yes, sometimes there are, and I will show you, there are times where we don't do much, and usually that is followed by a very, very quick reaction. Now, in theory, right? So this is a kind of post-mortem analysis, so it's easy that to say, it was kind of predictable that this could happen, because, to be honest, right, and I need to be honest when I don't expect certain things, right, and as I am honest when I tell you that something looks like before, and so it's quite predictable. I didn't expect this major correction. I kind of feared it, because I thought that the market needs to react somehow, right? I was hoping more a correction up, not down. But it kind of makes sense because the market was relatively weak, and I can tell you a few things why that was the case. So if you look at the previous cycles, right? So the pattern is usually this: we stay quite close to the white line for these 2 years, and then we start to climb and cross this blue line, and then enter this red territory. That brings a lot of liquidity because there are all these positions, all this accumulation at relatively high prices. And then, as we start to climb up, these, even if there are corrections, people don't see or don't feel that correction that much because there was a lot of accumulation in this region. What happened is, because of the ETFs, we arrive here quite fast. This was exciting. It was considered a bullish event. There was a correction because we were not supposed to be there. And also, the kind of ETF FOMO ran out a little bit of steam. But this correction was barely brought us to this green area. It didn't compensate. We didn't have a move that compensated, that kind of balance, this equilibrium, right? And so after the election, we got even more FOMO, and we kind of undone this correction, and we found ourselves above the power law very quickly, right? Beside these, I also mentioned many times that there was a huge difference with the previous bull runs because we didn't have enough liquidity, right? So we can come back to the liquidity, but if we look at the liquidity was another component that was always present in terms of understanding the what happens during the bull market, because it's not just a question of following the power law; it's a question of doing better than the power law, right? So actually, the bull run is a test of the power law where we deviate from it, and then there is a correction that brings us back to the power law. And usually this is associated with market rotation. There is external liquidity, global liquidity that comes in into Bitcoin, to the Bitcoin system, and pushes the price up. If you look at all the other, let me refresh this. If you look at all the other bull markets, we always had an excess liquidity. So if you watch my show, you know what these indicators describes, but basically I'm not just superimposing global liquidity like others do. I actually created a model of the price of Bitcoin based on liquidity. It is a blue line, the purple line. And you can see here, right before the bull run, the liquidity model was higher than the price itself. It means, we had plenty of liquidity. See, to do that, actually, we needed COVID, right? This was COVID that kind of reset it. So remember when I told you it was a fake out, right? It was this. We went above the power law, the middle power law. There was a correction, but we had even a stronger correction that kind of compensated all these, right? It created this balance that was mentioned before. There was a lot of liquidity hunting down here, and kind of almost reset the system, right? And this is why then we had a very, very aggressive bull market. In fact, a little bit too aggressive because we had an early top. We had another top later on, but we had plenty of liquidity because of this reset. And if you look at the other bull market, right, because we stay so close to, in this case, we stayed so close to the bottom power law, the price was basically undervalued relatively to the available liquidity. So this happened every single time that we had a bull market. And this time was different. And for months and months and months, I say this, right? And kind of draw these lines where I say, oh, okay, look, it looks like we're kind of repeating this pattern too, because the price is correcting, if it continues to go down and the liquidity continues to go up, maybe some crossing. And then it didn't happen because whatever, right, the FOMO associated with the election, Trump, there was, you remember how it felt, right? Everybody was super excited about what, the strategic reserve, the change of administration, a better environment for crypto, and it put, the price would push. But I was saying so many times, I don't know, are the ETFs, are Saylor alone able to sustain the bull market? I had this question mark because I would have preferred, in an ideal world, for the correction to be bigger, maybe go. we were in the 50, right? When we started to see this run up. I would have preferred, for the price to correct even more. Of course, Bitcoin doesn't do what Giovanni says. It does whatever he wants. But, this will have been a little bit more similar, let's say, to previous cycles. It will have been probably more consistent, right? And the liquidity also to continue to go up. And this will have made us, will have created a situation which was much more similar to what happened before. Instead, the opposite happened. Liquidity started to drop, price was started to go up. And I did say it was weird and different. So I think this is part of, one of the pieces of a puzzle to understand what is happening right now. Why we had this, kind of, we ran out of steam, and then actually we needed a correction to bring a little bit more balance to the market. Now, we do see liquidity going up, that is a very good sign. Now, it's going a little bit down, but hopefully it's just a little deviation. We will continue to go up, hopefully. Now, one of the things that is missing is the United States liquidity, because I have how this model is created. I can turn on and off all the different contribution. If I turn off the US, it doesn't change much because right now there is not much contribution. It's mostly coming from the other countries. So maybe we go even faster if we start to see some liquidity coming from the from the US market, so from the US government. So that is one thing that actually is pretty good, because we still don't have a US contribution. If we see the US contribution, we may see this liquidity model go faster up. Now, do we need this crossing? Do we need this crossing that I mentioned here to actually resume the bull market? I don't know. I think it will be nice to see it. Now, it's not a guarantee of anything. It will just bring it more in line with things that we observed in the past. But it's one of the things that we try to put together to understand what happens, right? Without recurring to these TA tools that other people use, support resistance lines, that are drawn by hand. We're trying to make it to have a more scientific understanding of what is happening. So these are some of the things to consider. I'm quite happy about the recovery, right? So is it a temporary recovery? Are we going to see a continuation going up? It's not super violent like in the past when we had event like this. I can show you. So if we go back to the bimodal chart, did we ever have an event like this where we were above a power law and then we actually had a correction? Oh, yes, it was. It's not frequent, but it happened at least once. So and it was here. It didn't happen last cycle, but it did happen in the second cycle. So we had this, right? But notice how sharp this. So we can kind of zoom in. First of all, it was a correction after pretty fast run up. We corrected, and then we went down pretty fast here, and then we recovered, right? It seems almost like bouncing back, right? Very, very, very fast within a few days. So it's a little bit early to say that it doesn't look like this, but yeah, I don't think it does look like that. So we are recovering, but a little bit slower. But at least we have one example. So it's not that we never like we can have fake out when we are in the green area. We can have fake out when we are in the red area. Now, do we continue to go up? We will see, right? It's the only thing we can do. We can only monitor what is going on and compare it with what happened before. We should keep an eye. But yeah, so this is one of the things. One other chart that is useful to look at is this one. See if I can pull it up. So they're like, so this is kind of interesting. It's the hash rate. So this chart, what this chart is trying to show is a power law model between the amount of hash rate produced, right, and the price. So basically, it's again what will be the fair value of Bitcoin based on hash rate alone. And I found it very interesting that since June, we are following the bottom power law. Remember, I told you that hash rate, we can consider this a support line to be kind of a proxy for how much it costs to produce a Bitcoin. And since June of last year, the hash rate seems to follow very, very closely this line. To me, this is a very healthy sign that the system is very efficient, and it does indeed follow the power law path. And even during this correction, it kind of didn't affect it at all. It's still moving along this direction. So it's one of the indicator that we can look in terms of how healthy the system is. It's still producing all the security that we need, that the miners are there. In fact, we are increasing hash rate production based on following the scaling behavior that we observed before. All right. There was a chart I wanted to show you in terms of the liquidity. Another chart. Okay, so there is this chart, which is another piece of the puzzle. So this is an interesting chart. Basically, what I'm doing here, I'm showing futures over spot. So I'm taking the ratio between the price for Bitcoin is traded in average with the futures contract over the spot. And I'm then I'm using a moving average for this ratio. And there is a fast and the slow ones. So you can see how usually when the red is on top of a green one, so the red is the fast moving one, of a blue one, we have bullish behavior. And when it's the other way around, it's bearish. Okay. So right now we are in this undefined situation. We have been there, in fact, since the beginning of January. Kind of this blue line told us that we lost kind of some of the momentum, right? The bullish momentum, and we were more in a bearish situation. So in theory, one could have used this information to predict that we needed some kind of correction down. And we will not see a strong correction up, like a return to bullish behavior until we see a crossing here. We can look at how the cycle compare. Okay, so in this chart, we have a cycle comparison. I want to do something with this chart. also shows the liquidity. So I'm going to use a smaller liquidity, and I'm going to, okay. Yeah, so we can watch, we can look at the liquidity too. And so this is not global liquidity, it's more like local liquidity, right? Where we are with the local liquidity. So the cycle comparison. So let's look at the cycle comparison first. Okay, and I'm going to turn off actually this liquidity because it's distracting right now. We can go back to it later. Okay. Sometimes I have to reset this. Okay. All right. So this shows us the different cycles in the past, right? If you are curious, because one of the biggest questions. So the question is not, is the power law still holding? Of course it does. In fact, for all the people that say, oh, is this a correction showing the power law is not true? No, it's actually quite the opposite. Because remember, every time we have these bull runs, or we have let's say the bubble, the entire bubble episodes, like this going up for 1 year and then going down for 1 year, they are a part of a Bitcoin story, right? This is what this graph is trying to show. It's trying to show the entire story. This is what the story that I mentioned before, because independently of what happens this cycle, we can find order and structure in the entire history of Bitcoin so far. And people have proposed many things, but I think almost all the other stories are destroyed by the current data. Like, for example, some people have proposed that the cycle have different durations. We don't have different durations. So because one main question was this peak here. Is this the real peak of a previous cycle, or was this one? My interpretation is this one. If we had another peak, so there is a model, for example, that is I think it was support because he kind of conceded. The author of this model is Leo Hart, I think is known on X, and he kind of modified it, his prediction of where the peaks are, where he can include, by making the length of each cycle slightly different, it could include also the first bubble. And in my model, I don't include the first bubble because I consider it an anomaly. This is why I don't use it. I don't use it in this comparison of all different peaks, the previous peaks. So I exclude this one. He includes it, and the price that he pays for that is that then, in his interpretation, this is not the peak, but this is the peak. Well, if that was the case, then, and you continue to make the next prediction, in his model, we should have a peak in April. And, we don't know because April didn't happen yet, but it's quite unlikely that we are going to see a peak in April. So in a way, and I think he already conceded, that model is gone. So the other model is this one, where the right interpretation is that the peaks happen at the right time, and they seem to have happened all around Q4 of this year, where we have a bull run. So this is a more consistent interpretation. Yes, it doesn't include this bubble, This bubble happened before the halvings. It seems different from the other one, so we can consider it an anomaly. It's not as satisfactory. It would have been nice if also this bubble was included, but at least this interpretation of when the peaks are happening, right, during this particular time, and then also a structure that is 1 year up, 1 year down. It's very simple, right? Very organized way of thinking about what happens so far, right? We have we can even use this terminology of a clock that I used before. 9 is the start of a bull run, 12 is the top, 3 the bottom, and so on. 9 happened in November for us, right? For this cycle, if this cycle is supposed to be similar to the others. So the question that remains is what is happening right now consistent with this picture? It's slightly different. In fact, we can see what are the similarities and what are the differences. At the same time, we don't have enough information to exclude, to say, no, yes, maybe this is the picture of what happened in the past, but this cycle behaves, is not comparable with the other ones. It will be nice, right, by the end of this cycle, if we can draw another graph where we can plot this curve here, right? In fact, maybe I should start to draw these here, where you can see how it compares to the other things. But here is where the comparison is happening. As we accumulate more data, then we can draw this data on top of the other 3 cycles. So it's not excluded that we still see, right? This is what it will look like if we continue to have cycles that are similar to what we observed before. We calculated when the peak is going to be, how big the peak is going to be. The prediction is 200K, and the peak. See, no peak happened exactly at the same time. Sometime we were close to this 12 o'clock event. That is basically the end of December of that year. So this will be the equivalent for us of the December of this year, the end of the December, the end of the year of this year. Sometime the peak was a few months before, sometime was closer to that event. Okay, but we can draw a box here and be very, very close to this purple line. Are we going to see something similar, right? Well, we don't know. It's not. So, for example, this peak in April, even if it didn't happen, it's very reasonable to say it's so close, right? We have basically 2 months left over, that it's very unlikely we are going to see a peak, right? A peak in this case will mean something that goes at least a factor of 2 from 100,000, right? Close to 200, maybe 180. It'll be okay if we reach 170, 180. It doesn't have to be 200, but a relatively huge factor. So if, for example, even Leo doesn't disagree about this, because it comes with factor of 80% for the calculation of the top, comes from the decay. There is an observable decay of these peaks that can be extended and extrapolated to make a prediction of where to expect the next peak. If this pattern is a true pattern, if it continues to hold in the future. That is the only thing that you can use really to make a prediction of where to expect the peak, how big the peak is going to be. It could be bigger, it could be smaller, but this is what we have in terms of trying to use the data to make some predictions, right? So I would say that it's very unlikely you're going to see a peak in April. We can basically almost exclude it. This is how science works, right? You make hypotheses, and then the data tells you, now these hypotheses, and many times happen in science like that, where you have competing models, and then some models get eliminated by the data. They are equally valid until you don't have information. As you accumulate information, some models need to be abandoned. So I think that particular model needs to be abandoned. We are not going to have a peak in April, very unlikely. Can we still have a peak in November, December. I think it's not excluded, because one way of thinking about this, I already explained, we kind of got, we were we anticipated this movement towards this red region by this fake out, right, due to the ETFs. And we never really reset like we did with COVID, right? COVID created kind of a reset that brought us back to the support line. We did have a correction, but it was not big enough. So in a way, we are already higher than what we were supposed to be if you compare it to other cycles. Like, for example, the second cycle, we didn't even cross the power law. So here is where the power law is, right? And we didn't cross that. We were not even crossing right now at this particular time, because this is where the second cycle was at this particular time of the year. This is where the previous cycle was. Remember, we had all these earlier peak, probably due to the stimuli, due to the COVID liquidity. The liquidity was created due to COVID. And so this was we can consider this kind of an anomaly, having this early peak. So this is why we see all this activity early on. But it was still early for this cycle, So basically, we are not supposed to be there. We are supposed to be lower. So maybe this reset kind of bring us kind of equivalent of this, right? And so, in a sense, we are still on the path. So this shape, that I draw here, is not supposed to be the exact shape of how we go up, right? It's just a way of indicating that we leave a power law, we leave a support, and then we continue to go up, right? And then we reach a top. But you can see, kind of give us at least a rough feeling of where the price should be if we follow the textbook description of this process, right? We leave, we can still say that the bull run starts more or less here, right? Because this is when you see the deviation from the support becomes bigger, and then we continue. But by this time, we are not even supposed to be above the power law, if we kind of follow the textbook description. So we are, in a sense, early. Now, of course, as we go, if we don't recover quickly, if we stay there for a long time, to reach our target of 200K, we will have to do more and more in terms of how fast we go up, right? If we had just left 5 months, 6 months, then instead of going up with I calculated a certain point, as we were here, we needed something like 0.2% a day. That is 2 times what the power law tell us. So just to give you a feeling, right? We can do that calculation. It's not very difficult calculation to do. It goes more or less like this, right? So right now it's so we have left, let's say 8 months if a peak happens in December. So let's give ourselves more time. So it goes more or less like this. So and 200K. So 200. So you take 200 divided by 84, that gives us something like 2.3, and then you need to take the root of, well, basically how many days there are between today and 8 months, right? So you take 30 times 80, okay? And you take whatever that number is, 30 times 8, 30 times 8 months. And then you take the root of that, right? So 2 times 2.3, the power of 1 over 30 times 8. I know it sounds complicated, but that number is about 3.4%, 0.34%. I can put it in the chat to show you how to calculate these things. Let me put it in the chat so you can see it. Yeah, like this. So Oh, yeah. So 2.3 is the ratio between 200 and 84,000. We need to go up about 2.3 times. We are left with 30 times 8 days. You take this, you do these calculations. That number is 1.0034. So that means we need about, if we started the process now and we went up in average, right? If it was a compounded interest every single day, someday we will do better, someday worse. We could even have a correction, but in average, we will need to do about 0.34% a day. So that is equivalent to 0.24% a day. Okay. Is that possible? It's not possible. Like just to give you an idea, we were going about zero. So if we actually use the not the first peak, but because we went there pretty fast, but if you use the second peak, we did about 0.44 instead of 0.34. This is what we did last cycle. So we need to do kind of like we did in the last cycle over about 8 months in a pretty sustained and consistent way. But so it's very doable. It's still doable, right? Of course, if more and more time passes, if we get even a bigger correction, it becomes less and less likely that that we see this target of 200K. There is this other graph. It is also very interesting. So basically, it's kind of what I just did. So I calculate in this graph, the white line, what the white line represents is the average return, right? So the return is basically what the price today over the price yesterday. So if you have like 1.01, that is 1% return, right? If you have 1.1, that is 10% return. If you have 0.99, that is the loss of 1%. So we are calculating the daily returns, but averaged, because it will look like very, very messy, right? Up and down every single day. But if you average it over a certain period of time, and we are using 1 year here. 1 year is useful because you can see it kind of you identify these peaks. Notice how these, see, there is a very precise pattern here, right? These oscillations, these kind of sharp waves, and they're associated, the peaks are associated with the peak. It's almost actually a very nice indicator to tell you when we have reached a peak or a bottom. And notice how the peaks are going down. That is, kind of related to the idea that these deviations from the trend are smaller and smaller. So here I didn't subtract the power law or anything. It's naturally the power law. It's a point of reference for this oscillation. All what I did was to calculate the returns over 1 year, average over 1 year, for every day. So every dot here corresponds to a particular day, and basically is how much in average you have done if you look back 1 year. Of course, when you're at the top and you look back, say, oh, I did fantastic, right? I did it's almost like if in average I did these returns, right, for an entire year. And you can see over the time, these returns are becoming smaller and smaller and smaller, right? They were enormous in the beginning, and over time they became smaller. And also notice the pattern, right? When a bull run starts, we usually start to climb, right? And then we have a correction when we have a bear market. We kind of are the equivalent of where we were in previous cycle. Will have been here, right? So, well, actually, let's be more correct, right? Because let's update this. We are at the end of February, so kind of here. So I need to move this arrow here. Okay. So you see, it looks like we are starting to climb, right? Same thing here. Let's find February, end of February. Yeah, here, because this is more associated with the first peak. So it looks like we kind of almost reached this first peak, and then we had a second peak here. But you see how this is different from before, right? We have this kind of flat region and maybe a correction. When by the time the equivalent of this time, maybe the closest is this one, right? But you can see here there was a hint of climbing up, right? Leaving this flat region, leaving the flat region and then climbing up. Same thing here. We can look at this one. Yeah, this is a little confusing because we had this first peak and then we had a second peak here. But all right, so March, February, kind of here, right? End of February. So again, pretty fast up, even with the correction. So this doesn't look like similar to the other because actually we started to correct down and we went back to this blue line. What is this blue line? That blue line are the theoretical average return due to the power law. You see, when we talk of, there are two types of diminishing returns, right? That actually probably connected with each other. There is the diminishing returns of the peaks, how big the deviation from the peaks are. And then there is the average, the diminishing returns that is always there every day that passes. Bitcoin, if it follows a power law, is supposed to have less and less return. Now, over time, the change of these returns is becoming smaller. It was very aggressive here right in the beginning. Every day we were making like 1%, right? If we went all the way to 2011, the graph, because it's doesn't have enough data, doesn't go before that. But if you were all the way to the end of 2010, you were making 1% a day. That is insane. Try to compound that over 1 year, right? It's an amazing amount of money. This is why it was incredible. Bitcoin was so. This is a theoretical curve. This is why it looks so smooth, right? And you can see how the real average returns kind of oscillate around that, right? When, of course, we do much better when we are close to the peak. And notice how actually these bottoms were all consistent because of these support lines. They are flat, right? So they are diminishing here, but they stay flat here. And right now, we are going close to the blue line. So basically, this is telling us over the last year, if you look at back 1 year, we kind of did the same average return, slightly better because we did climb, right? But so the average return for the power law is 0.1%, and this we can try to zoom in and see it's not very much higher, right? 0.13 instead of 0.1, right? So we want to see these starting to climb up, because that will be one of the signs, one of the things we needed to actually identify these as a bull run. And in fact, we need to stay, we need to start to climb and go above this green line to reach this 200K. And the 200K needs to be reached here. So if you project this peak here, it's going to be in this region. So we need to climb from here all the way there to actually reach 200K. So it's different from my other cycles for sure. I'm not ready to give up on the idea that we still have a normal cycle like before. They can be different, right? But the big question that many people probably want to know is, are we going to reach the 200K? I'm not ready to say no. It's not like we can conclude that we don't have a peak in April, so there is not a double peak or early peak. We need all the time up to the end of the year to even have a chance to reach this 200K. But let's continue to monitor. All what we can do is to compare patterns that happened in the past, where were very consistent, very regular, and notice the similarities and the difference. So to conclude, the power law is as strong as ever. If anything, we are coming closer to the power law. That is what you don't want in a bull run. You want to deviate from the power law and then correct down to the power law. But at the same time, we are too early to say that the cyclic nature, this regularity that is in addition to the power law, is not followed anymore. So, this is where probably I'm going to end, and I'm going to take some questions instead. Okay. All right. Hey, Gladiator, nice to see you. I'm looking at your chat. Maybe I can overlay, actually, so everybody can see it. Nice to see you, Gladiator. Gladiator has fantastic models, and I like his bullish spirit. His models are beating mine any day. Yeah, so your photo, Mr. Saylor, please say McNeely. I express my thoughts on these. Look, I love Saylor. I think he's a good influence in Bitcoin, and he has the right intentions, and he's one of us. There are certain things I don't like, because in theory, Bitcoin, we'd rather, it's kind of idealistic, right? But it would be nice if more people join the network instead of one centralized entity. Now, one can argue, say, well, beside his own personal Bitcoins, really, MicroStrategy is kind of something that other people can invest in. So it gives exposure to the stock market, to Bitcoin. So it does play a role. It's important. So if you think it like that, where there are investors, it is centralized, but it's also not, right? Plus, if he is consistent and is true, where he says, I'm not selling the Bitcoin, because we do need liquidity, but it's also nice if there are a lot of people or entities that hold on the Bitcoin. We need both, right? So, in general, I am with him, and I'm a supporter. I do own MicroStrategy shares and so on. But, once in a while, it comes up with things like these. And maybe, you have also to understand there are people from all over the world, right? And certain things that maybe I know that is a way of saying about this kidney thing, but at the same time, how it was said, I don't think it was appropriate, because many people are also concerned about their health, right? We had this event, this Italian American guy that shoot this CEO of a health, an insurance company. There is a lot of unrest. One of the things that I don't like, that Bitcoin is becoming political. It should be, even the people that we don't like, the people from the other side of our political spectrum, they should like Bitcoin. Bitcoin is universal. It's doing a lot of things. That is one of the things that, for example, the people from the left, they think that is associated with billionaires and the crypto bros and all these things. It's not true, because it could do a lot of good things in terms of the things that people from the left care about. Like there are a lot of things in third world countries that are good. There is more and more evidence that actually Bitcoin is good for the environment and blah, blah, blah. So we want to reach, it should be a universal thing. And when you do things like this, you give a bad angle, right? People think, this is really what they are believing, that they should give up part of their body. It's also a question of dignity. You don't sell yourself spiritually or physically. I know it's a joke, but I didn't like it. You can be, I know, because we take this responsibility, right, to give people some insights. Let's not call it advice, because it's not even the right word legally. Some insights, or share some of our experience or whatever. And many people listen to us, right? Like you are listening to me. And so they kind of look up at us, right? Some people, of course, are critical, but many people look up at Saylor in, a certain degree, even people like me that are much less influential. So it's a big responsibility, right? So you want to be compassionate when things like that happening, when there is a major correction, because some people are scared, the people that have not been around for a long time. And you can be supportive without saying things like this. We were a little bit too much, right? So I think is all what I want to say about that. Okay. Thank you for this comment. Thank you so much. It's very kind. So many good comments. Thank you. I appreciate it. I join. Yeah, so we have this. Sorry for the promotion, but yeah, we have these. All these indicators are available to people. It's available through our Patreon program. So if you want to join, it's very inexpensive. It's basically almost symbolic, and there are links, right? You should be able to see the link how to join. We have a video. I know several people have problem with how to join Discord. There is a video on Patreon, so watch the video. But if you get stuck, please contact me. Okay, DM me. You can DM me on Patreon, or you can DM me on X, and I will help you. Okay, we can resolve it. So please don't get stuck. Reach me out, and we can fix it. Okay, just do that. All right. Have you spoken to institutional investor about your discovery? Yeah. First of all, one time I had a long discussion with Fidelity, with their crypto research group, and they were very interested. I work with two different organizations. They are not really institutional, but they have relatively large funds, and they are trading. And I know this is controversial because many people don't want to trade their Bitcoin, but the idea, that I'm always supporting is that you can take a small quantity. Instead of playing with stupid meme coins, why don't you take a little bit of your investment, and then you can use it as a collateral. You can play with options. You can use a futures trading, where you take your a small percentage, like 5%, 4%, whatever it feels comfortable, and then use it as a collateral to do trading. And the idea will be, like, for example, one of the type of trading I'm doing, I'm buying the dip with my bot, and then my bot sells the future. It doesn't touch my collateral, and I make money, and I buy more Bitcoin. So these are things that I'm sharing with people. I'm not advising you to do anything. You can do whatever you want. I'm not a financial advisor, but these are some of the things we are exploring. So I'm talking with several groups, and in fact, starting next week with one of these groups, we are going to have the same show, this show. Instead of being by myself, they are coming in, and then we are going. One of them worked for many years in Wall Street, and then we are going to discuss the market. We are going to show you how the bot is doing. We are going to analyze it, using the power law, but also the experience of Marcus. Marcus is one of the people that will join us. He's like a long-term investor, and he has worked for many of these institutions, and they love it. They contacted me. They wanted to be part of a team, and they want to integrate the ideas beyond the power law. And plus, I don't know if you guys noticed, but there are two different articles on Forbes about the power law, and many people like it. Many people started to understand the message and what is trying to deliver. But they are also sometimes stuck in their own understanding of things. But the entire idea is that eventually, I think the power law will be accepted as a real valid way of understanding Bitcoin over the long term. Okay. Yeah, so I can show you a graph of MicroStrategy, because there was a time when I was curious, right? I was curious and say, okay, what is the relationship between Bitcoin and MicroStrategy? And I found, now, we have to be careful with these things, because with Bitcoin, we have it's basically 15 years of data, right? And with MicroStrategy, because they are adopting this Bitcoin strategy since 2020, August 2020, we don't have a lot of data. But for the little data we have, I found that they are related with the power law. That is kind of curious, right? And the power law is in favor of MicroStrategy. So basically, you make a plot of the price of MicroStrategy versus the price of Bitcoin, and you find there is, in a log chart, it's a straight line. It's a fuzzy straight line. And that means there is a power law. You measure the slope, that slope is 1.3. So means there is a non-linear relationship. So this is another thing that many people don't understand. They talk about some kind of premium, relatively to Bitcoin, but it's not linear. It's non-linear. So it's 1.3. Just to give you an idea what that means, if Bitcoin double, and this is if Gladiator is still around, he talks about stuff like this, right, in a joking fashion. But if we are really serious and we look at the signs, and if this relationship continues to be true, you take 2, right, whenever Bitcoin double, and then you take the power of 1.3. That is, it doesn't seem much, right? It seems 2.46. Well, it's 40, almost 50% in addition, right? So it doubles. So if Bitcoin doubles, MicroStrategy does 2.5, right? That is good. What if we go 10? What if Bitcoin goes 10? And then you take the power. You see, this is where the non-linearity comes from, right? It becomes bigger and bigger as the change becomes bigger. So if I go 10, now I get 20. So if Bitcoin goes 10, then you will expect MicroStrategy to go 20. I know it doesn't sound that huge, but it's not bad, right? And you can see, basically, this is the model that I created based on this relationship. The blue line is the real price of MicroStrategy. The red one here is the model. The green line is a kind of a time model, because you can say, okay, if there is a relationship between the power law and MicroStrategy that is a power law of 1.3, then Bitcoin is a power law of 6, what will be the power law in time for MicroStrategy? Is basically this green line, and that gives you a power law of 7.2. So basically, MicroStrategy is like a turbo Bitcoin power law. It's instead of having an exponent of 6, it has an exponent of 7.2. And so that is the green line. So what happened when everybody got super excited and they were, playing with leverage, etc., there was a disconnect, right? This is why what you see here. We had first a jump, and then MicroStrategy started to go crazy. So anytime you see a straight line in this graph, because we don't have log, unfortunately, on TradingView, that is an exponential. So it went crazily exponential, and then even more exponential. And when this was happening, I was telling everybody, this is not sustainable, right? As nice it looks like, we'll have, because if something like that happens, everybody join. Can you imagine? there is always a correction when something like that happens. So we had a correction, and then after this, I need to replot it and see if a power law it's basically back, but just by visual inspection, it looks like, right? Because you see, this is the model, this is the price. Yes, there was this gap, right? I don't know how to fix it. I don't know if we can shift the model up or something, but I think we went back to this 1.3 relationship, but I need to check. I need to check if this is the case. But if it continues to be like this, then it's nice. Actually, it's a nice thing because it's something that you can count on, right? To have this premium of 1.3 as a power, that actually is non-linear. But we need more data. I need to replot this and see if we went back to this general power law. Yeah, we can double check that. Yes, I do care about Bitcoin very much so, and I care about you guys too. All right, I think this kind of covers all the questions. We cover most of the material. If we go back, maybe we can spend 1 minute looking at the liquidity, the local liquidity. So we had a graph like that. Let's go back to it. Let's see, maybe this one. Okay. And we have a liquidity level. Let me adjust the liquidity levels. So this is one of our indicators called the band indicator. And no, I'm looking at the wrong one. Am I looking at the right one? Oh, should be this one. Yes. Okay, and now it's showing 300 leverage, but it's too much. Let's choose 10. I think it's more indicative. Of course, it's going to be denser and denser as you decrease the leverage, but it's more comprehensive in this way. I do want to have a better indicator for liquidity. This is okay, but there are better ways to display, so I'm going to work on that. But if we zoom in here, see we had a lot of liquidity around 88 and 84. This is when I was saying I think the price will correct, will turn around because we are basically kind of heating up all the liquidity. And so as this line became fainter, there is less and less liquidity there, right? So there is still some liquidity left over at around 83,431. The price didn't go there, so probably it's not worth it, because of it, how these things works, right? So when this correction happens, this indicates people that wanted to buy Bitcoin, right? They have all these positions. These are all leverage positions. So they keep these orders there. They use up relatively high leverage. There are some crazy people that go all the way to 100 or even more. And they are hoping for when the price correcting. And if the price corrects because it's such a high leverage, even a small correction makes them a lot of money. Then they sell, they made their money and they're out. What happens if the price continues to go down? Well, if the leverage is very high and they don't have enough collateral in their account, they get liquidated. And so that actually, it's forcing them to sell the price at these much lower values, that they didn't want to sell, but they are forced to. And so whoever is doing this, because many times, right, this is initiated by some huge big whale that wants to push the price down, sometimes even by creating fake order. They create these orders when they, have you ever seen it? Have you ever spent some time, if you didn't try, right, you look at go to Bybit, go to some exchange, and look at the market depth, right? You see these two lines. One is red, and like with kind of histograms of all the positions, right? One is red, one is green, and you can see that it's almost like a continuous battle, right? Tug of war. And you can see sometimes these huge big orders that appear at where the ask and the bid are, and sometimes they move on the other side, right? We are trying to push the price. We are trying to, because many, these things are done by robots, right? Bots, right? So you can trigger bots to go in a certain direction according to the different orders that appear in the market. So they push the price, and we started to go down. Then, it's kind of like almost like an avalanche. There are all kinds of different things happening. But at a certain point, if you're running out of orders, everything stops, right? And so you're buying all the liquidity available, and then now it's almost like you have fuel because you have all these orders. And of course, whoever bought wants to see the price going up because we want to make money. And usually these are much more clever and sensible investors because they don't buy it at this huge big leverage, right? So these are like really speculators, and I'm sure some of them are clueless people, but others know what they're doing. Most of the time they win. Once in a while they get liquidated, and it's part of a risk, but they will not do it consistently if it didn't work, right? Many times it works, other times it doesn't, particularly when you have big huge corrections like this. But most of these buyers should be relatively long-term buyers. They want to see the price building up and going up. And so you see there is this huge big gap here. That is a good sign. It means that it's quite unlikely that we go down. If we go down, we need to reach this other level, 77. But it's kind of a good sign because, there is this line forming there that is kind of now is becoming the new support, and then this huge big gap. So it's not easy to go through this gap. So it's one, again, think about all these like pieces of a puzzle, right? So right now it seems the price should stabilize around this and hopefully going up. Anyway, hopefully this is useful information, and we can see each other next week. What is your thoughts on altcoin? Take this last question. I don't deal with them because I dealt with them in the past, and I did even well with some of them. But in general, my focus is on Bitcoin and Bitcoin only. At a point, we can look at some altcoins, mostly because sometimes they work together in the sense of for example, we can look at the ratio, between the value of Bitcoin and the rest of the market cap and things like that they can be used to understand what is going on with the market. But in general, I don't want to spend time or energy with altcoins. I think most of them are a waste of time. All right. Thank you so much, guys. Next week, like I say, we will have a show with everybody in the team on this company that I'm partnered with. It's called Manotaur, and we will discuss a little bit about also the trading bot and some of the moves with trading bot and other things that hopefully are interesting. All right, thank you so much, guys. Stay safe.